Well, it's August and I have the latest figures and news to share with you to keep you up to speed with what's happening in the housing market, both nationally and locally here in Spokane. My name's Phil Wells, I'm a real estate agent who likes to keep up to date with what's happening in the market, and I want you to be as informed as possible too. In this video, we're going to look at pending home sales, mortgage rates, as well as mortgage application rates. We'll also look at some real estate news that stood out to me recently. We'll then try put it all together at the end of this video and see what it means for you. So, let's get into it. Looking first at pending home sales for existing homes. Just a note on these figures, they are the latest figures available, but they are from June. We obviously look at pending home sales rather than closed sales because it takes a while to actually close a transaction. So closed sales in June would represent activity back in April and May, whereas pending home sales in June give us the most up-to-date impression of what the market's doing. Contract signings in June posted a month-over-month decline of 1.9%. Year-over-year contract signings declined 1.9% also. I have been hesitant to use year-over-year figures for the last few months because that was the height of the lockdown, but now I'm starting to attach more weight to year-over-year figures. The index in the West decreased 3.8% month-over-month and down 2.6% year-over-year. Right now we're seeing just a seesaw of activity every month when it comes to pending home sales. In February we saw a huge dip, in March we saw a gain, in April we saw a dip, in May we saw a strong 8% gain, and now we're seeing a 2% dip in June. This feels like a market that is uncertain and is trying to figure out where the level is. However, this is just one metric, so we shouldn't place too much emphasis on it just yet. We will of course revisit this at the end of this video when we piece everything together. According to the National Association of Realtors chief economist, buyers are still interested and want to own a home, but record high home prices are causing some to retreat. This last part is crucial. Are buyers getting fed up with constant price increases and beginning to refuse to play games? I'm seeing this myself actually. I got a call from a list agent recently on an offer that we had on a property, inviting us to submit our highest and best offer. I had had previous conversations with my client about the highest price they were prepared to go to, and they told me that this was the price and they weren't prepared to play games and get involved in any sort of bidding war. I am sensing this more and more with my buyers recently, but that's just anecdotal, that's just my experience. This economist goes on to suggest that mortgage rates will start to inch up towards the end of the year. This rise will soften demand and cool price appreciation. The 30-year fixed mortgage rate will increase to 3.3% by the end of the year and will average 3.6% in 2022. I have been thinking for a while actually that increasing mortgage rates is one of the few things that can balance out this market. Obviously this sucks for buyers, but if the definition of inflation is too much money chasing too few goods, then that's definitely what we've been seeing with low interest rates recently. The obvious outcome of this is price inflation for homes. Increased mortgage rates will bring down home prices slightly, and this is definitely a factor to watch. No mention in this report at all about inventory that was supposed to start to materialize with the winding down of mortgage forbearance programs, home building, and the eventual end of the eviction moratorium. Obviously that moratorium has been extended at the start of August, but it is expected to end and landlords are expected to offload rental properties when it does. Let's move quickly to look at mortgage rates. Obviously most buyers use a mortgage, so keeping an eye on rates is a huge leading indicator when it comes to buyer demand. Sticking with June for a second, we started off June with rates around 3.13% and ended June with rates around 3.17%, so a nice steady month of low rates there in June. I am able to give you up-to-date figures for mortgage rates, and as of August 10th when I'm recording this, mortgage rates have dropped since the end of June to 2.99%. So this is a good strong positive sign for buyer demand. Anything around a 3% rate for a 30-year fixed rate mortgage is a pretty incredible rate. Sticking with mortgages for a second and looking at mortgage application rates. It doesn't matter what rates are if nobody's actually applying for a loan after all. This is a huge leading indicator for the overall housing market. So let's head over to the Mortgage Bankers Association, the MBA, and see what the experts have got to say. Remember, we're no longer looking at June now. The MBA publishes figures weekly, so we're able to get a really up-to-date impression of what mortgage application rates look like. Mortgage applications rebounded last week, including an increase in mortgage applications for the first time in nearly a month. Rates slightly rose but remained below 3%, driven by an end-of-week increase in the 10-year Treasury yield following a positive July jobs report. More positive news for buyer demand there. Now let's take a look at some real estate news that stood out to me recently. Okay, let's take a look at these articles. From Bigger Pockets, home prices continue to rise, but has the market reached its peak? Home prices broke records in May according to the S&P. Home buying conditions improve slightly as mortgage rates decline. And the one that really interested me the most this month, pending sales dip price drops become more common. Now you can see in this article that median home prices are continuing to increase. They've increased 21% according to Redfin here, and over 4% of homes had price drops. Now 4% doesn't sound like a lot, but what are the things that are getting pushed out to prospective buyers by websites like Redfin, like Zillow? It's new listings and price drops. So the more people see these sorts of things, the more the expectation is that the price you see is not necessarily the price you're going to pay, and maybe home prices are going to start to drop. Or at least buyers are going to get fed up with paying too much for a house and expect to either pay list price or below list price. Looking now at my local market, Spokane. Sales are down 4.4%, median home prices are up 31%. Inventory is down, representing only a 14-day supply, and new listings are down in July. So pretty much what we're seeing across the US, just accentuated a little bit more here in Spokane. Sales are down more, prices are up more. Now let's try piece all this information together. We have a decline in June for pending home sales. Prices continue to climb. We have some evidence that buyers are becoming more selective and refusing to engage in things like bidding wars. Great mortgage rates are driving an increase in home mortgage application rates. And we have the prospect of higher mortgage rates on the horizon. To say this is a mixed bag is an understatement. When market indicators like this get a little bit too messy, I like to return to the fundamentals. What is demand doing? We have low interest rates right now on mortgages, and we have increasing employment as America gets back to work after the lockdowns. All of this should point to strong and continued buyer demand. But what is supply doing? As we've seen, pending home sales have yo-yoed throughout 2021, and the one thing that has remained constant, though, is price increases, which could suggest that the thing driving this fluctuation each month in pending home sales is the amount of available homes for sale of that month. So now what we really need is some positive signs when it comes to supply. I'm hoping what the National Association of Realtors chief economist has been saying for the last few months about more inventory coming on the market because of home building, the wind down of mortgage forbearance programs, and the end of the eviction moratorium will begin to kick in and boost the supply. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That really helps me out. If you are in the Spokane area and looking at listing your home for sale or buying a home here in Spokane, please give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Like I said, my name is Phil Wells, and until the next one, thanks for watching.